Hello, everyone. If your break's going anything like mine right now, we're right at the end of January and it's snowing quite a bit. So I figured today would be a really good time to bust out a story time and kind of go over some things that happened in my own personal investing experience. Maybe try and give you guys some insight and hopefully help you guys so as to not make some of the similar mistakes I did. I think one of my favorite things about learning about investing and reading investing literature and reading opinion pieces from these great investors is they always kind of tell you the mistakes they made so that you can try and avoid them. And so today I want to do a similar thing where I talk to you guys about the absolute worst investment I ever made, the thought process, all the things that went down with that. It's still actually in my portfolio, as we'll get on later in the video. But overall, I just wanted to give you guys a rundown of that and hopefully provide you with some insight so that you don't make some of the same mistakes as me. So, without further ado, let's get into it. So, I'll start off by explaining kind of where I was at in my mindset and investing experience when I actually made this decision that would be by far my worst investment ever. So, for starters, it makes sense, but this was really, really early into me actually making investments. So, basically, all through high school, I decided to just focus in on working as much as I could, saving up all the money, and I really didn't have anything I liked spending money on at the time. I mean, video games in the grand scheme of things, if you're like me and you're somebody who really wants to wait till things are on sale, it's one of the better ways to spend money and that you can get things on ridiculously good sales, and I had no problem delaying gratitude for a later date when it was a lot cheaper. So when I started investing, I had actually a considerable amount. And early on in my investing experience, I made some of, weirdly enough, the best investment decisions paired with some of the worst. And I attribute that mainly to me actually starting with two separate accounts. I had a brokerage account and I had my Roth IRA. In my Roth IRA, I put a considerable amount of effort researching what types of ETFs I wanted because for me, it made a lot more sense to just set my money there and let it go to work because I wasn't going to be thinking about this money forever. So, why would I try and make decisions and have a portfolio that I had to manage a lot if I wasn't even going to utilize any of the funds till I was near 60? So, in that regard, I ended up making a lot of really good decisions in that portfolio simply by just letting it passively invest. Now, on the flip side, in my brokerage, I originally started with a pretty good idea. I basically had baby's first core satellite portfolio going on in my brokerage account to start out, and that was kind of the best decision making I could have. But unfortunately, it wouldn't be a worst investment I ever made video if I didn't make bad investments. So quickly I realized, as many people do, oh, some of the single stocks in my portfolio significantly outperform this passive investing ETF I have. This is when I started to sell off some of my Vanguard S&P 500 in my brokerage in order to fully pursue basically investing in single stocks. Now, when I look back at the process I utilized to actually pick out my investments, it's genuinely laughable to me knowing what I do now, knowing the time and research I would put in before ever considering investing in a company at all. Back then, I just didn't do that whatsoever. I would basically go on to Yahoo Finance, I'd see front page, oh, this company's doing good. I'd look at companies and then I'd decide, okay, I want to invest in this company, but I'll wait a week to see if I can buy it on a down day. That was about the extent of valuation we got out of me, was primarily what a lot of people do. Even as I've gotten older, a lot of people that you'd think were more experienced, they just live on the charts. They live on whatever news is on Yahoo Finance, whatever that tells them, and then they don't actually do any due diligence into that. Now, this investment actually came from somebody that I really considered and I admired growing up trying to actually learn to invest from, and that was a family member. See, the thing when you have family members or friends who come to you with investment advice, I think as a lot of us that I've kind of talked to and a lot of similar kids and have gone through this situation is after you've basically gone through an entire undergrad in finance, you kind of realize that a lot of people don't necessarily know what they're talking about. And so they'll just come spit price action at you basically. And you're like, yeah, but what are the fundamentals? This doesn't really describe anything. You don't know what this company actually does. And you can kind of dismiss it. But early on, and if I hadn't actually got an education at all into finance, and in that time I hadn't had a single finance class as that wasn't offered, I just kind of got this news article sent to me, and that person was like, "Hey, you should look at investing in this. This is a new up and coming company. And right now, renewable energies is a really big deal. And this company is looking at becoming a hydrogen energy company in Canada. And you have the great opportunity of getting in when no one's around. And this is going to become the next Microsoft." Now, when I describe companies as becoming the next Microsoft, my gut approach right now is don't touch it with a pole, just because that's not the game I like playing. It's not one that I'm particularly good at. And if I have a winning game, I'm not going to play a game I'm significantly worse at because maybe the potential payout will be higher, but most likely I'll just be losing money. Like, that's not a winning long term game for me. But at that time, that sounded like a fantastic idea. So I also think a lot of where this idea kind of came up and just kind of took over me was that I didn't have a clear mindset or clear goals or clear understanding for my portfolio. So right now, typically what I do is I have a couple points in my head. So I'm like, okay, what could I get on a year's worth of CDs right now? I kind of try and float around that percentage in my mind. And then of course, I look at what the S&P 500 has done in the past 20 years, which is 11%. That is something I would be perfectly happy receiving in perpetuity, right? So if I have an investment, I'm not necessarily looking for the investment to become a 500% return in a very short period of time. Why? Because when you start playing those games, you're going to primarily be losing money, and there's a chance you never actually find the Holy Grail company, even though it exists somewhere out there. But I didn't have a clear goal. If I had had a clear goal then, like I do now, of trying to utilize more of a value approach, I think I would have been wildly more successful as I've been enjoying the success now from utilizing that approach. Additionally, at the time, my really only goal was how much money can I make right this second? And while Wall Street and Yahoo Finance and news sources really, really push this mentality, and they have forever because it's consistently made them money, it's not a long term recipe for success. And you can actually look at the stats on that. I bring them up all the time on why I don't think the vast majority of people should hyper focus on day trading. But nonetheless, my goal at the time was just focused on how much money I can make right now, right? So in my head, this investment made sense. I didn't necessarily have the steps or process in place to go through, look through a company, look at the financials, understand everything that I was looking at, and make good decisions then. Otherwise, I would have avoided this entirely. Now, the next thing that kind of led me down the trail of making my first investment in this company and making a rather substantial one is actually so laughably funny to me looking back. It's almost painful, but I think this is something that needs to be understood by a lot of people because they don't actually kind of think through this. And that was the idea of the potential returns. Now, when you start drawing up in your head this idea of potential returns, you're participating in speculation, right? There's not a this is my fair value intrinsic target that I have a 1 year target on and yada yada. No, I was going for the I'm really early in this investment. Here are similar companies in this space. And if this company becomes large enough, this investment that I'm looking at making could be $50,000. What's also really funny to me looking back at this is that I actually was very, very, very wrong in that assessment. It would have been a heck of a lot more than $50,000. That doesn't make it a great investment decision, though. If it had become the next Brookfield Renewable Energy Company, that wouldn't have made the process I went through, or well, I should say the lack of process, any better. It just it's so funny to me that I made this decision based on math that I didn't even do correctly. And a lot of people throw that out. I think talking to adults, specifically in the past couple of years about Bitcoin in particular, and just kind of hearing some of the wild expectations of it, I think kind of gives you insight into, oh, okay, this is what speculation looks like from an outside view. And I'm very grateful I went through speculation on an inside view so I can look back, and this has been a perfect reminder of, hey, don't do this. But that's kind of something that was really funny. What I actually did, right, was I treated Brookfield Renewable Energy as if it had the exact same share count, right, as my company. And then I was like, oh, if it got to this many dollars per share, which is not actually how market caps work. So it's really funny because I like completely got everything wrong, and it still led me to invest. And I actually underreported what it would have been in my head, and yet I still invested. So again, these types of things can happen to people if they don't have a great understanding of investing at the time, and it's something that pains me to look back at just how completely wrong I was. Now let's talk about my actual initial investment into this company, because it was a wild ride, right? I was somebody who, even at that time, I understood the value that could be in concentrated bets into single stocks, and so it made sense for me to put a sizable portion in, right? At that point, I think it represented about 5% of my portfolio when I made my first initial investment. I was still relatively early on into working and saving up all of that money, so it was a sizable amount of money to me to put basically in a crappy penny stock that didn't do anything at that point in time. And it pains me so much going through this because I had a perfect exit opportunity on my bad decision. What I mean by that is the article that I was sent by that family member that kind of pitched this company as the next big hydrogen energy company in Canada, right? It attracted a lot of investors with probably similar investing experiences to myself at 16, right? And a lot of us ended up buying shares and pooling money. So my shares, I actually saw a 100% return in less than a week. This would have been the perfect time to say, you know what? I haven't done any research on this company really outside of going onto their website, which was very, very limited and didn't really tell the whole story of what they wanted to do or how long it might take and what the process was going to be like or anything like that. It just said, oh, we have these salt domes here, and the salt industry, it makes this much in revenue a year. Like, things you hear on Shark Tank when Mark Cuban's going, yeah, no, this isn't a plan, right? So I had this great exit opportunity. My shares go up 100% in a week. And naturally, instead of looking at it and being like, hey, this is a really, really risky position I've put myself in, it's actually grown to become a considerable portion of my portfolio. Actually, even the insiders in the company, like the CEO, put out a statement that he said, I don't understand why our share price is moving so high right now based on no news, which that should be red flag. That should have been Torrin jumping off the ship right that second. That is the time you leave that boat and you take your 100% and you go put it in a credible company. But I didn't do that naturally, right? I used this 100% as an excuse that, oh, I'm actually really, really smart and I found the next Microsoft and this is going to work. And all of my ideas of making $50,000 when I'm 16 is going to work out for me. Wrong. Naturally, there's a come down to earth moment in this story, and it happened very rapidly. It was basically in a span of 3 months, and I wasn't even checking my account every single day because, I was focusing on work and doing other stuff, and I played sports in high school, and I was pretty busy. And so, in a matter of just a few months, my shares were at like minus 80% from their all time high, right? And what was once a sizable portion of my portfolio and could have been a winner was now a massive loser in my portfolio. And again, this is a point where I should have realistically looked at it and been like, you know what, it's time to call our losses here. But instead, I did something incredibly stupid later on. I halved my cost basis because that was the problem. The problem wasn't that I didn't understand this company and didn't understand what an exploration stage company meant and how long that potential payout was. The whole problem was definitely my cost basis. And that was it. That was totally 100% the problem. After I invested, then it solved and just skyrocketed to the moon. I'm kidding. That was not at all the solution to my problem. It actually got a lot worse from there. And from that moment on, I swore off buying any more shares in the company. That being said, I still hold it in my portfolio. Now, why do I hold this loser, this eyesore of a massive loss in my portfolio? Well, for me, it acts as a really good reminder. See, I think a lot of people, when I hear the stories, or even if you just go on Wall Street bets once, a lot of the people end up being repeat customers who make these decisions and then they get rid of the proof as fast as they can and then they keep making the same bad decisions. Now, I'm not suggesting everyone make a bad decision so you have a reminder in your portfolio, but for me, that actually has worked wonders in reminding myself, hey, this is why speculation was bad. And I had actually that idea in my head even before I started really getting into reading financial literature. But even since then, I can work through and look at examples of people making that same exact mistake. And I was very fortunate in that I made that mistake when I was a teenager with relatively not a large sum of money. I mean, yes, for me at the time, it was a large sum of money, but in the grand scheme of things, it was not a significant large sum of money. And that was a mistake I was really able to learn and grow from and prioritize not making that exact same mistake ever again. So, overall, what I hope the moral of the story that you kind of take away from this is you're going to make mistakes investing. That being said, you don't need to make the same mistakes that somebody else made, right? If I had done what, looking back, if I had to start all over again with investing, I wouldn't have necessarily learned by stepping through landmine fields, blowing my portfolio up, and then learning. I think the much better approach would be to get some good, realistic financial literature. Now, one of the absolute best pieces of literature I can recommend would be The Intelligent Investor by Benjamin Graham. Honestly, any of the versions, but I especially like the commentary by Jason Zweig, who writes the Intelligent Investor column in the Wall Street Journal. That one's really connected to me, but it's been fascinating each time I pick up a book on market bubbles or something that goes over that, realizing, hey, this is a very common thing and I don't necessarily need to feel bad that I made those mistakes. I just need to learn why I made them, understand, okay, if I'm going to make them, how can I make it so that it limits the damage in my portfolio, and importantly understand, okay, what can I actually do to never make a similar mistake again. So, overall, if I were going to give you guys advice on how you can actually kind of avoid this speculation and not make the same mistakes I did in my portfolio, it would be not only become more knowledgeable through reading, through learning, through watching documentaries, whatever resources you want to utilize, actually fully learning, not just being told, hey, this is a company that you should invest in because its share price is going up. Understand the company. I feel like in this investment process, I've learned so much more about this company after I made my investment than I should have. Like, at the time, I knew basically nothing. And then after years and years of following this company, just because now I'm along for the ride. I'm interested where it goes. If it goes to zero, it goes to zero, and I will still have made my mistake. But I think it wouldn't have even been necessarily a bad investment if I fully understood what I was taking on. I was taking on a multi year challenge, right? That was going to take, at minimum, companies like this 8 years for them to do all of the research into the actual land plots they own, and then maybe sell it to a company with all of these maps that are like, oh, you can haul out these salt domes to make hydrogen energy in, or you can sell all of this salt for road salt. But this is a multi-year thing, and I had no experience ever investing in companies like that and didn't know what I was doing. So overall, I hope the ideas you kind of take away from this is understand if you have found yourself in a similar situation. Do some reflection. Are there companies in your portfolio that you really don't know that much about? Because a lot of people, they don't think a company will go down 50%, and it really well can. I'm sure a lot of the Enron investors didn't think their investment would suddenly be $0, but that can happen, and I don't want that to happen to you. And hopefully, the people who have watched this video will learn through my experiences and not have that happen to them. Overall, I just wanted to thank you for letting me yap a bit about one of my personal investing experiences. I hope you had a great time watching this video. I really appreciate all of your time. If you did enjoy it, feel free to like, comment, subscribe, any of those things. I greatly appreciate your time. Thank you so much.